Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so what we're going to talk about is, as many of you know, home prices have gone up dramatically. And the number they always use is median.
Mm-hmm.
Median. And we want to talk about this and use an example because going forward, it can be very confusing when numbers are reported as far as home values, okay, and what that means. So we're going to start. I'm going to show you the first chart we're talking about. And I'm going to show you the second one. It's just a slide. And we're going to show you something that's going to surprise you. And then, because all I want you to do is think about this, and then we'll give you some examples, okay? All right. So we're going to talk about a market. We'll use a small market, and there were 7 home sales. Okay. And the home sales were 1,800,000, 600, 500, 450, 400, 250. Now, median. Median means the middle sale. So that's why sometimes you'll actually see sometimes the median's exactly like 350,000. And it's not like 352, 473. That's usually the average. So the median is almost always a whole like a number like that, right? And it's just because it's the middle one, half above. And the reason you don't use average is because you get a market where you have some really high-end homes and they sell, $48 million, and that's average home sales $1 million, but not because that's misleading. It skews it.
Right. So so if the average home is $48 million and you sell one for, if a home is $48 million, you're selling one for $1 million as well, the total is $49 million, and then what, the average is?
24.5 million.
No, that doesn't really make a lot of sense. So median is actually a better way of looking at it because you're getting a better handle on what's happening in the market.
Okay. Now, what we're going to do is I'm going to show you the next slide. Now, in the next slide, the exact same homes a year later sold for the exact same amount of money. So let's just say home prices didn't change, with 2 exceptions. The 2 high-end homes didn't sell, meaning they either didn't go on the market or they just didn't sell. Like they put them on the market, didn't get a buyer, so they just took them off the market. Right? They didn't sell. So you had 5 sales in that market. The $600,000 house, which is still worth $600,000. So the guy bought it for $600, he sells it for $600. The $500, the $450, $400, $250, right? Okay. Everybody that sold their house got the same amount of money, but the median's now $450. So it looks like a 10% decline in values. But you're going, well, it's not. I just paid, and you go, wait. If prices declined 10%, I just paid $500, and this guy paid $500 a year ago. I must have overpaid, but you really didn't because it's the mix of homes. Okay, so here's the first. I'll tell the first story, and then you can give some other examples.
Okay.
Back a long time ago in Las Vegas, during the run-up, home prices were going crazy. This was 2005, and home prices were still climbing like crazy. There was this one zip code in Las Vegas that had a 40-something% price decrease. Home prices, like the median, was down 40%. And somebody asked me when I was showing this chart, and somebody said, wow, I wonder that area, something bad must be going on over there. And it took me a while. I go, what? This doesn't make sense. So I went and looked into it, and this is what I found out. The area was an area called Lake Las Vegas. It is an area where when they first were building homes, they were building like these huge homes on the lake, like these multi-million-dollar homes, really high-end homes. They also had these high-end condos that were selling for like $700,000-800,000. This builder goes into the same zip code and basically starts throwing down tons of tract homes. Now they're decent, but they're not super high-end. Okay, so these are, instead of multi-million-dollar homes, these are like $400,000 or $500,000 tract homes. Right. So they're above the median.
Right. But to give you perspective, when Todd's talking about these multi-million-dollar homes, these are multi-million-dollar homes that the likes of Celine Dion live in. Okay. So these are super high-end homes.
Yeah. So what happened was because the mix of the types of homes changed dramatically. It wasn't the zip code wasn't extremely high density, and then some builder, goes in and says, okay, we're going to build this massive subdivision, starts throwing homes down, and then they start selling. So all of a sudden you're mixing in these were the cheapest things in that zip code, right? And all of a sudden it looks like the the numbers are declining. They're not. Home prices aren't declining. If the homes had already been existing and sold, they would have sold for more money because that was the trend. So that was sort of my comparison. So it's you have to be careful when looking at these numbers. So want to give another example of like how this affects, like what's the effect of this of the mix of types of homes that change, like say in a down market.
Right. So kind of to finish up your point, and in the case of Todd's example, the tract homes that were being sold, obviously they're on smaller lots, and and their density is far greater, right? So there are a lot more of these tract homes being sold. So that also affected the numbers. Of course, there weren't as many multi-million-dollar homes. So you have to kind of look at the whole composition of that market to really understand what's going on. Kind of the same can be said in other neighborhoods. I mean, we had Summerlin, and Summerlin didn't get hit as hard. Part of that was because those homes were more homogeneous, and so those numbers kind of stayed more true to something that made sense because those homes were much more homogeneous. So you do need to look at the numbers and kind of dig in a little bit to understand what is happening before you can draw a conclusion.
Something else that's happened in Vegas is the mix of homes has certainly changed in the last 10 years. Mm-hmm. The median is now around 500,000. It was 315 at the last peak, and it dropped down to one into the 100,000, between $100,000 and $200,000 range. But what's happened in the last decade, and really in the last 5 years, is the birth of the Las Vegas luxury market.
Yes.
Like we're talking massive amounts of luxury builders flooding into the market, building homes, and even though it's really expensive now, these $1 million homes are not $1 million tract homes, like where you go to a subdivision, there's building, you pick a floor plan, it's $1 million to base price. That was unheard of. If you wanted $1 million home 15 years ago in Vegas, you had to go to like Christopher Homes or these custom builders that only built like in the golf club on the course. You really just couldn't get $1 million homes built. Even Toll Brothers, who is a luxury builder, was building $500,000 houses.
Right. So Las Vegas is really famous for having a lot of master plan communities and homeowner associations and that sort of thing. And that's kind of part of this trend. So it's not unusual to see a 3-bedroom, 2 or 3 bath home for $1.1 million. And we're not talking on a huge lot or anything. We're talking basically something that used to be a tract home, and it's maybe 2,000 square feet, and it's $1.1 million. It's not on a golf course. It doesn't have strip views. There's nothing particularly exciting about it except the community in which it is located. It's probably in a guard-gated community. It probably has walking trails. It probably has tennis courts. It probably has community pool. It probably has all these community amenities. So because of that, Las Vegas has all these homes that I can tell you that you can find a $250,000 3-bedroom 2-bath, or you can find a $1 million or above 3-bedroom 2-bath in Las Vegas, and you're going, well, how can there be such a great disparity? Besides location, it's all the community amenities and that sort of thing. We used to just have the Del Webb communities for the retirement communities. Now we have lots of other communities that are much more upscale. And again, they have all kinds of features that are similar to the Del Webb communities, which are the retirement communities. But these new retirement communities are much more upscale, and all those features are enhanced, and they are in similar neighborhoods, which I think is kind of interesting. But they are just much more geared toward the luxury market.
Yeah. The whole point of this video was just to get you to think about what these numbers mean when they come in. Mm-hmm. When real estate prices go up, every house doesn't appreciate by that amount.
Right.
Remember, that's a general amount. And sometimes the median goes up, some home goes up more, some homes go up less. Mm-hmm. In Vegas in the last decade, the homes that appreciated the highest percentage, we've had homes go up 400% or 500%. Because there were a number of houses, not condos, that you could buy for between $30,000 and $50,000. Mm-hmm. That there were at least $200,000. You can go buy those houses now, and no kidding, you could buy a $40,000 house mm-hmm. in 2010 that's today worth $200,000, and you 5x'd. But a $200,000 house isn't worth $1 million.
Right.
Okay, that $200,000 house could be worth 500. It could have gone up. It could have doubled and 50% more, or it could be worth 400. But it's not worth $1 million. And then $1 million house could be worth $2 million, but it's not worth $5 million.
Right.
Okay, so when you see the numbers in a declining market, the same thing. You could have certain ranges of prices in certain areas go down more, and then of course it depends what the home builders are doing too.
Right.
Their mix of homes that they're building,
and it depends on the community and what that buyer pool in that community is interested in purchasing. I mean, Las Vegas has benefited greatly from a lot of people deciding that they didn't have to be in whatever market they were in, that they could be in Vegas and they could run their companies from Vegas. And because of that, they're able to purchase, maybe sell a house in the Bay Area for $2 million that wasn't, by comparison, as luxurious as a home in Las Vegas is for $2 million. And that sort of thing. So we have had this benefit of people from out of the area buying in Las Vegas. This is not a new thing for Las Vegas, but what's new for Las Vegas is the amount of luxury purchasers in Las Vegas over the last, I would say, 5 years or so. That has certainly been unprecedented. We've always benefited from that, but not to this extent.
Yeah. The other thing, this will be the last thing, then we'll end the video, is that in certain markets, there will be people who just give up and say, hey, I was going to buy a house this year in San Diego or wherever, but I can live wherever I want, and I just can't afford, because I think median prices in San Diego are $1 million. I think they broke $1 million sometime in the last year. That's a median in San Diego. Mm-hmm. So the median homes in San Diego, $1 million. You say, I don't want to pay $1 million for an average house. I can still go to Vegas and get one for $500,000, mm-hmm. and not pay state taxes. So even though it's not like San Diego or whatever, so they come to Vegas, and then that actually helps. It helps soften the blow. And then there would be some markets that get hurt a little bit more, mm-hmm. because people still start moving around to different types of properties. And then, of course, we talked about this before, where you have people that normally, this really makes it harder if you're trying to buy an entry-level house. Right? Is home prices or is, because people say, forget it on the big house, I'll just get something smaller, and now there's more competition. We're still seeing, anecdotally, this is as of today, of agent posts on Facebook, I thought the housing market was supposed to get, soft and easy, and I just put in an offer the first day it came on the market, and they're telling me they have multiple offers, they want everyone to waive everything. And they're upset because this is an agent working with a buyer. They've been frustrated for the last year. The worst thing you could have done in the last year is work with a buyer. So the best thing you could have done last year was work with a seller, right? So your agents are still upset. Oh my gosh, this is terrible. So this will be interesting to watch. This is the first big shift we've had in the market since 2008, really, when it really was in the toilet tanking. And, it'll be interesting to see what happens. We said it's not going to crash. We still stick to that. We never said it wouldn't go down. We never said it wouldn't go sideways. We said it won't crash. The crashers are still saying it's going to crash, and we'll see. If they all sold their homes, then it has to go down about 30% before they break even. We talked about this on the video. Yeah,
so if you talk to a crasher, the first question needs to be, do you still own real estate? And if you do, why?
Yeah, everything's going to crash. Why not buy it back later? And then all those real estate agents who are telling you should sell before it crashes say, did you sell your house? Or the financial planner who says you should sell all your real estate investments and put it in the stock market so I can grow it. You should say, did you sell your personal residence? And since that's what you think is the best way to do it.
Right.
All right. So mid-month update. We'll do one every 2 weeks. Please leave us a comment, hit the notification bell, subscribe, and we'll see you on the next video.
Bye.
Bye.